All right. Happy New Year, everybody. 2024 is officially in the books. And I wanted to make the first video of the new year about what I expect the stock market to do this year. So this will be high level. I'm going to give you some price targets to look to the upside, a couple of things that I'll be looking for, and just talk about some common sense principles about the market in general. So first of all, let's recap about what I said in 2024 is I said that I did believe it would be a bull market. And if you remember back, I said we were up against a 5% money market because anybody could go find a money market in 2024 and just simply dump their money in that and then make 5% with no risk. And I did say if you were going to be in the stock market, you had to be sure that you were going to beat that 5%. Otherwise, why would you be taking on risk to only make the same amount as a very safe place to put money like a money market? So of course, the market did beat that. We had a 25% year in the S&P 500. So if you beat 25%, you did very well. If you simply sat in the S&P 500, you did very well. And if you did not beat that 25%, then there's likely things you will want to reflect on and learn and not repeat in 2025 so that you can continue to become a better trader. So 25% without a doubt beat the 5% in the money markets. And I do believe that is why we continue to see so much money coming into the stock market. So I do want to talk about a very common sense principle is that in 2025, we are looking at 4% for money markets. And you could go lock in a promo rate for that right now and have it almost guaranteed for the year. And we know that the Fed is still lowering these rates, so that is likely going to continue to go lower if you do not lock in a promo rate. So this is definitely a smaller number of interest that people are going to be getting on their cash, and we do know there is still a lot of money in money markets, and this does favor that money will continue to go into the stock market as people are looking for somewhere to store that money so that it continues to beat inflation. And of course, we know with inflation being as high as it is that people are absolutely looking for somewhere to put their money. So when we talk about 2025, we need to do the common sense approach first is where are people going to put their money? Are they going for that 4% money market? Are they going to go into bonds? Are they going to go into real estate? Or are they going to go into equities like stocks and cryptocurrencies? I do believe the very common sense approach here says that 2025 will be another bull market. So let's get that out of the way first. And remember, everything I talk about is based on technical analysis and price action. I am not going to start speculating about valuations or why not the market should go higher. I am telling you the common sense approach says that money needs to go somewhere in 2025. And unless you are going into something like a money market and only wanting to make 4%, you are going to be looking elsewhere like bonds, real estate, and the stock market. And I do believe stocks are still very attractive. We still have lots of tailwinds, lots of AI growth. And as you know, the stock market is not the economy. So while people will start speculating about a recession, it is still possible for the stock market to go higher because nearly 50% of the S&P 500 is in only 10 companies. And those are your mega cap blue chip tech companies like Google, Microsoft, Amazon, Nvidia, etc. So with AI growth, there is a very good chance we do see the stock market going higher in 2025. And I do want to give you a percent just to have in the back of your mind that if you just bought the close of 2024, I am looking for the S&P 500, which is the SPY ETF here, to go up about 8% towards 632. If we have a wildly bullish year and we go higher than that, then I do believe we could go all the way up to 700. And from the close of 2024, that would be nearly a 20% year. Now, as I said, with the money market, you don't just simply go buy stocks without risk. So we will talk about risk to the downside. And if you are looking for only 8% to the upside, obviously that is a lot of risk in the market if we get a full-blown correction from here and go down an additional 10 or 15%. So from where we close, we are very close to the weekly 20-period moving average, which is right around 581. That would only be an additional drop of about 1%, if that. And if we went all the way back to the previous high, we would drop an additional 3 to 4%. Now that is where the risk lies in the short term. If we started to break down below that retest of the breakout, which is right there at 563, then it would start to look like this bull trend could be rolling over. And that means we could be going into a downtrend that would start to go to even lower prices. So we do have a very clear risk level right here in the 560s that we would look for a market transition if we started to break down below it. Remember, our job is to manage risk because we cannot just simply look at the upside reward and completely write off all risk. It is very possible the market could go lower, and that is always the risk you have when you are investing or even trading. So we will want to pay attention to that critical level as we go into the new year. If we start to break below it, obviously it does open up the probabilities that we could be going into a bear market or a bear trend or a deep correction. So it would not be out of the ordinary to say that this could be possible, and that is why we always manage risk. We never just blindly buy into the market and hope it goes higher. Everything is always based on risk and reward, and one of the most important things that I will continue to teach you is you should be taking 1.5 times reward trades so that your risk is always lower than your reward. And if you continue to do this, you will become a profitable trader. You just have to learn to be disciplined and actually do this correctly. So if we are looking for 8% upside, we cannot take on risk that would take us all the way down into the 570s, because in this example, we have more risk than we have reward. So pay attention to the risk reward. There is a video linked in every single one of my videos that teaches you how to manage risk and teaches you how to set up proper risk reward ratios. So in a modest year where we're only looking for 8% upside, you do have to look at the possibility that some people will continue to park their money in that money market because they are okay with only getting 4% in a money market if they're only expecting to get 8% in the stock market. Now that alone isn't good enough, because if we continue to pull back and let's say we do get a retest of 563, the upside reward is now greater than this 8% because we are now coming from a lower location, and then the upside reward from there would be up to 12%. So as I always tell you, move like water. As the market pulls back, the upside reward gets more attractive, and that eventually brings in buyers. And as we get closer to a 12 or even 15% market, there is a very good chance we see more and more money leaving these money markets and moving over into the stock market. Now, I bring this up because this is what I call a common sense approach that a lot of people forget, is that the stock market is a free market and people are looking for somewhere to put money. So don't for one second think that valuations need to come into play here. If there is a ton of money looking for somewhere to go and there is enough reward that is worth the risk, the market will continue to go higher. And that is why the stock market has historically seen bubbles where valuations go through the roof. All rationality is through the roof because markets do not need to be rational. And that is why I do believe with very strong confidence that 2025 is going to be another bull market. Now, I don't expect a lot of you to agree with me, and I think a lot of you are probably laughing at the fact that I'm saying that, and that is why we always have a free market where you can place any trades you want, and there will still be lots of fear-mongering bears out there that will be trying to scare you that the market has topped. They're going to tell you all about a recession coming, and they're going to tell you it's the best time to sell stocks before a major drop. And I'm telling you right now, they say that every single year, and eventually when they are correct, they look like geniuses, but they missed out on these raging bull markets where you could have bought in the lows in 2022 and had an absolute monster gain of over 70%. Because they are so worried that the sky is going to fall that they can't fathom buying into the market, and that is why they miss all of the rallies. So don't be a fear-mongering bear. As I said earlier, we do not just throw all risk to the wayside. We know the risky scenario, which is going to be the breakdown, and then we can manage risk accordingly. And that is why I always tell you, have a plan. Know your 1.5x reward ratios so that you actually have a plan for profitability. And do not let talking heads or loud bears scare you out of believing it is possible that we're going to get a bull market that could take us to 632, and in a wildly bullish scenario or even a bubble scenario all the way up to 700. Now, again, this is all based on the common sense approach that money simply needs somewhere to go. If you truly believe all of that money is going to go into money markets, real estate, and the bond market, and there's no reason people want stocks, then of course you're looking more for this bearish scenario, but don't simply just assume we're going to get the bearish scenario. This is still a bull trend. We are still above a rising 20-period moving average on the weekly chart. Price is still making higher lows and higher highs as we are just a few weeks removed from a previous all-time high. That is not what you are going to see in a bear market. You are going to need to see concrete evidence of lower highs and lower lows and the confirmation of the breakdown. And then and only then will it make sense to even consider talking about bear market scenarios and downtrends and all of the bearish possibilities that could come from that. And in that event, we will simply react and manage risk and then start looking for the probabilities of more bearish scenarios. As I always tell you, trading is about managing risk and playing probabilities, and you need to have great risk reward. You need to stack the odds in your favor. And in a bull market and a bull trend, the odds always favor the buyers to buy at support and continue to form these higher lows and higher highs as we continue to march higher towards higher prices. If we don't get it, that's completely fine. It is very little risk to buy at support because that is where we can easily manage the risk, because that is also going to be where we have our risk reward set from. So understand risk reward, understand patience and discipline, and understand trends. Do not fight the trend. Always be willing to move like water and adjust as the chart updates, because every day and every week and every month we are given new data data from the chart because we follow price action, and that allows us to continue to adapt and move like water and be a profitable trader for the year. So as a quick reminder, I do have my service where you get the exact percent allocations that I am putting in the TQQQ, which is going to be great for buying in bull markets. And you're also going to get my percent allocation for SQQQ, which is where we are going to be able to profit from any bear markets or downward moves in the market. And you will get these alerts exactly what percent that I am suggesting to take. Any day that I make a trade, I will update you on what percent I am in, what percent I'm suggesting. And of course, you're going to see the bias based on whether I'm in the TQQQ or the SQQQ if I think the market is going to go higher or lower. This is a very simple way for you to follow along with me and be a very profitable trader and crush the market in 2025. And I'll put all of the details on how you can join in the description of this video as well as the comment section. So 2024 was a great trading year. I do believe 2025 is going to be another bull market and another great trading year, albeit I don't believe we're going to get another 25% gain like we had this year. I do believe the market will continue to go higher. And I also do believe there will be a very powerful correction sometime this year. And that is something you will want to be prepared for so that you don't get caught off guard and panic near the bottom of that correction when it's the best time to start buying. So as I said, my trade alert service is the best for knowing exactly what percent allocations to be in. And you can also check out my Discord server where you're also going to get access to all of my technical analysis for individual stocks as well as the members only videos. So happy new year, everybody. I think we're going to absolutely crush the market again in 2025. And do remember what I said about the fear mongering. Understand how to set up that risk reward so that you can be a profitable trader, and always be willing to move like water and change as the chart tells us with new data. So thank you for watching, everybody, and let's go crush this market in 2025.